有想法就有办法，
有办法就不用怕，
我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
我相信我可以，有目标就往上爬。
你相信你可以，勇敢地往前冲吧。
有想法就有办法，
有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。
你相信你可以，勇敢地往前冲吧。
有想法就有办法，
有办法就不用怕，
我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
我相信我可以，有目标就往上爬。
你相信你可以，勇敢地往前冲吧。
有想法就有办法，
有办法就不用怕， 到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
Hello, good morning, all of you. Wow, it's Friday again. And yes, we will be starting our Facebook Live very soon at 11 o'clock sharp. Yes, at 11 o'clock sharp, we will be starting our Facebook Live again on Secrets Revealed. Techniques to solve tax audit issues. Yes, I will be revealing more secret today to all of you on how to solve tax audit issue. Yeah, I know you guys are very early. We are going to start at 11 o'clock sharp later. Now, since you're so early, help me do one thing. Yeah, help me do one thing. That is to share this Facebook Live out. Yes, you know, you want your friends, your family, your business partner, your business associates to also learn this together with you, right? So just help me to share this Facebook Live out so that they can learn this together with you. Very simple, just have to click the share button. Now, if you are viewing it from your phone, you see at the bottom of your screen, you see the share button, just click share, yeah? If you're seeing it from a computer, you will also find the share button, just click the share and share it out with your friends, family, business partner, business associates, because it's not often that I reveal secrets, yeah? So today, I'm gonna reveal another secret on techniques to solve tax audit issues. We will start at 11 o'clock sharp, yeah? So don't go anywhere, stay tuned here, don't go anywhere. And at the same time, please share this Facebook Live out, all right? I shall see you at 11 o'clock later. I will see you then.
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。
有想法就有办法，
有办法就不用怕，
我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，
有办法 的企业家，超越表现的力量。
Hello, hi, good morning, everyone. Good morning to all of you. It's Friday morning again. And yes, in just a few more minutes, at 11 o'clock sharp, we will start our Facebook Live today. And yes, I am going to share you another secret today on techniques to solve tax audit issues. And today's topic is about waiver of debt. It's about waiver of debt, yeah? So, wow, I see a lot of you here already that says good morning to me. Wow, I see Louise, Fong Lan, I see Lee Chai Yuan, Hon Ken, Patrick Chong, LLF Lee, and Yang Xiao Yan, Christine Tang, Winnie Chong, Melinda Tan, Ivan Chong, Lim Choi Yuan, Saniza Syed. Wow, thank you so much for joining. Thank you so much for joining me so early. In just a few more minutes, at 11 o'clock sharp, we will start today's Facebook Live. And I see more than 100 people are already here. You know what? It's not often that I share my secret to solve tax audit issue. So if you don't want your friends, your family, your business partner, your business associate to miss today's session, you know what? Now, quickly share this out. Share this out with your friends, your family, your business partner, business associates by just clicking the share button. If you're viewing it from your phone, you will see the share button. Just click the share button. Just click the share button will do. Or if you're viewing it from a computer, you will also see a share button. So you can also click the share button for you to share this out with your friends. Or if you have anyone in your mind that you want them to come in right now to view this together with you, just tag their name. Tag his or her name into the comment box and they will come in together and learn this together with you. Tell you what, they will thank you for this. They will thank you for tagging them because today we are going to review another secret to solve tax audit issue. And we will start in just a few more minutes. So stay tuned. Don't go anywhere. We will start at 11 o'clock. All right, I'll see you later.
一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕。 起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
All right, it's 11 o'clock. It's 11 o'clock already. And as promised, we will start our Facebook Live today. And I will share with you techniques to solve tax audit issues. Yes, today I am going to reveal another secret of mine on how to solve this tax audit issue that is on waiver of debt. Yes, you know, sometimes we will be having waiver of debt. And did you know that waiver of debt could be a taxable income? And how do we solve this? It is being taxed, you know, by the Inland Revenue Board. Today, I am going to review another secret on how to solve this issue. Yeah. Now, this is episode 8 already, right? Today is episode 8. Yeah, I know a lot of you maybe joining for the very first time would say, hey, I did not join the previous 7 episodes. It's already episode 8. Is there any way that I can, you know, go back and view your previous episodes? Yes, absolutely yes. You just have to go to my Facebook page. That is Tax Guru Zen Chow, Tax Guru Zen Chow, and you will find all the previous episodes over there. Yeah, you will be able to see all the previous techniques that I have shared. So, you know what? We are going to start right now. So, take this last opportunity before we really start to share this Facebook Live out, because today we will have an interesting session on how to solve this matter, right? This waiver of debt. So, you can just click the share button. Either you're viewing it from your phone, you can click the share button below, or you're viewing it from a computer. You will also see the share button. Click that share button. Or if you have anyone in your mind, if you've got any friends in your mind that you want them to come in and learn together, just tag the name, just tag their name into the comment box, and they will come and join you, right, in today's Facebook Live. They will all thank you for this, right? Because, like I said, it's not often that I always share my secrets, but today I'm going to share my secret on how to solve tax audit issue. All right, so let's get things started. And I see a lot of people are already in the chat box. Wow, okay, a lot of people say good morning to me. All right, just let me say good morning to all of you again, like Jeannie Wong, Dang Yin Ping, Tangerine Lee, Feng Ying Chai, VK Ko, Richard Lyon. Hi, Richard again. I think you have been following me all this while, yeah? Rodev Sinadurai, Cynthia Liao, Elaine Cheng, Saravanan, Ramaya, Jingying Qian, Alvina Mu. Oh, thanks, Alvina, for tagging your friend as well. All right, so looks like we have more than 150 people right now already viewing today's Facebook Live. So let's get things started, right? Let's get things started. All right, as usual, we have more than 150 people right now. And I just want to ask a very simple question. You see, every time when I do Facebook Live, I want my session to be very interactive, right? Those who have been following me, you know, I want it to be very interactive. I do not want to just speak alone, right, in front of this camera, in front of this computer, because it's going to be very boring, right? So I want it to be very interactive, right? So feel free to put in, you know, whatever questions you want to ask into the comment box from time to time, yeah, because I will be going to your questions and answer to your questions accordingly, yeah. But I just want to know, like, how many of you here are actually a first-timer? How many of you are actually a first-timer who joins my Facebook Live on this tax techniques to solve tax audit issues the very first time? If you're a first-timer, can you just put number one into the comment box to tell me that you are a first-timer, that you are joining my Facebook Live, this Secrets Revealed series, for the very first time, yeah? If you are a first-timer, please put number one into the comment box so that I know you are a first-timer. Wow, like Jeannie says she's a first-timer. Yes, Jeannie, wow. Don't worry about joining for the very first time, even though today we are on episode 8 already. We're on episode 8, yeah? But you can still go to my Facebook page, that's Tax Guru Zen Chow Facebook page, and you will be able to see all the previous videos, right? All the previous 7 episodes. But I encourage you join our live session every week, because during the live session, you will be able to ask questions and I will be answering to your questions. Yeah. Wow, a lot of first-timer here as well. Like I see, apart from Jeannie, I have Tangerine Lee, Tai Chai In, Christine Tang, Sugasni, Selena, Kavita, Ivan Chong, Alan Ho, Jack Lee, Saniza Syed, Saravanan, Jacqueline, Ivan Chong, okay, again, Alan Ho, Shirley Ming. Wow, so many first-timers today, many first-timers. Thank you so much for joining me, all right? So now, since you're coming for the first time, let me just briefly introduce who I am. My name is Zen Chow. Now, you know, people call me the tax guru of YYC. Well, the fact is that I'm actually the tax director. I'm the tax director and the head of tax department of YYC Group. Now, you may ask, then who is YYC then? Now, you probably have not heard of YYC. Let me just do a very simple introduction of my firm. Now, YYC is actually an accounting and advisory firm, established since 1974, right? And our motto, our aim is to empower entrepreneurial success. Now, to do that, of course, we have our vision and mission. What's the vision of YYC over here? We want to be the number one world-class accounting and advisory firm in Asia. Yeah, number one firm. Yeah, but to do that, we of course need to have our mission. Now, our mission is very important. Yeah, we want to inspire everyone, right? People like you as well, to overcome your odds, unleash your potential, and most importantly, find fulfillment in life. Yes, that's our mission. But now, to do all this, we need to uphold our three very important brand promises. Now, what are they? Now, the very first brand promise that we have is to share expertise. See, the whole reason why today we are doing this Facebook Live, why do we want to share our secrets? You know, who wants to share their secret? We want to share our secrets to you, our techniques to solve tax audit issues to you, because that's one of our brand promises. We want to share expertise. And we want to show the most proactive care to all our clients, because all our clients, we want them to have the most positive experience ever. Yeah. Now, you may think YYC is probably just a normal accounting firm out there, which is wrong. We are not a normal accounting firm, because a normal accounting firm out there would only provide services like compliance service. Yeah. Things like audit, you know, audit service, tax service, accounting service. But we are more than that. We are more than that, because we have our own advisory arm, and we do a lot of advisory services, a huge range of advisory services like strategic planning, succession planning, valuation, even cloud and digital transformation. You know, the very hit topic right now, yeah, right? Cloud and digital transformation, right? And we also have our own business school. Yes, that means we hold a lot of seminars, workshops from time to time. We also serve international firms, right? We have our global business services. That means we serve overseas companies as well, like outsource accounting, outsource bookkeeping, even outsource payroll. Now, if you see any of these services that actually interest you, feel free to drop us a message. Feel free to PM us, drop us a message to inquire further. All right, our profession team will get in touch with you very soon. Now, like I said, YYC was established in 1974. That means we are 46 years old this year already. We are also an international firm. Yes, we call ourselves an international firm because we don't just have presence in Malaysia, we also have branches in Singapore. Yes, we have more than 800 employees right now, more than 20,000 clients, and we have trained more than 120,000 participants throughout all our workshops, because we have held more than 5,000 workshops. Yeah. Now, these are all the awards given to YYC throughout all these years. And like I said, YYC is an international firm. That means we don't just have presence in Malaysia, we also have presence in Singapore. But of course, in Malaysia, our branches are in Klang Valley area, that's Kuala Lumpur, Johor, as well as Penang. Okay, now, I see we have more than 170 people already, more than 170 people watching today's Facebook Live. Yeah, I know you are eagerly waiting to start. But you know what? Each time when I talk about, where we have branches, I just want to ask one more thing from you all. Yeah, just to be more interactive here. Now, out of this 170 people, can I just ask, where are you viewing today's Facebook Live from? Where are you viewing this from? Can you just tell me, like, which state you're from, or which town or which city you're from. Yeah, if you say you're from KL, if you say you're from Kuala Lumpur, you can be more specific and tell me which area are you from. You can tell me like I'm from Cheras, you know, I'm from Kepong, I'm from Setapak, you know. You can tell me more specifically which part of KL you are from, if you are from KL, or you can just tell me which state, you know, which town, which area, which city you're from. Just let me have a view of out of these 180 over people right now, 180 over people, where are you all from? Now I can see answers are coming in. Ivan is from Penang. I see Kavita. Kavita is from Ipoh. And then I have Jing Ying from Batu King. Jeannie is from KL. Avina is from Sabah. Sarawana from Penang. Richard is from Cheras. And then I have Cynthia, JB. May is from Sabah. Ellen is from Sarawak. Carmen is from Shah Alam. Jeannie from Ampang. Katie from Sarawak. Tai Chai In is from Malacca, I think. Yeah, Jack Lee is from Shah Alam. And Saravana from Butterworth, Penang. Saniza also from Penang, Seberang Jaya. Wow, looks like we have people like all around Malaysia. Yeah? We have people from the north, from the south, from the east, you know. So we have everyone. Wow, I even have Tangerine from Taman Desa, Shani from Cyberjaya. Well, Lisa from Sarawak. Well, looks like today we have quite a lot from the East Malaysia. All right, Melinda from Sri Petaling. Cookie from KL, N from Rawang. Oh, CP is from Old Klang Road. Okay, that is from KL. All right. Angela from Subang Jaya and N from Bukit Damansara. Wow, looks like we really have people all around Malaysia viewing today's Facebook Live. Okay, I know you don't want to wait further, right? You don't want to wait further. And I know today, when you join me this morning for this live FB Live session, you want to learn my technique. You want to learn my technique, my secret. You don't just want to tell me where you are from, right? So let's get things started and let's look at episode 8. Yes, episode 8 of Tax Audit and Investigation Issues. Yes, today we have the 8th case to be shared with you on how we actually handle and solve this tax audit issues. Yeah. Now, again, those who have just joined us, if you say, huh, today is episode 8 already. Yeah. So, you know, how do I view back the previous 7 episodes? Don't worry. You just have to go to my Facebook page. That is Tax Guru Zen Chow, Tax Guru Zen Chow Facebook page. And you will see the previous 7 episodes all in my video, right? They're all there. But I encourage you to follow my page, because I will be doing this live session from time to time, and you will be the first one to know that I'm doing live, and you will be the first one to come in, and you will be able to ask questions as well, and I'll answer to all your questions. So feel free to put in all your questions into the comment box whenever you have any questions, yeah? And I will answer to your questions from time to time. So now let's look at today's case number 8. That's on waiver of debt. Now, you probably would have encountered this sometimes, yeah? When you say, oh, I have a company, and then the director, lend money to the company, and therefore there's an amount owing to a director. So then later you say, oh, the director doesn't need the company to pay back, so the director waives this debt, So a company will get a waiver of that, yeah, because the company doesn't have to pay. Now, the question here is, Imagine this. If you receive a loan from the director, you are a company, you receive a loan from a director, and then the director tells you, oh, you don't have to pay me anymore, right? I'm waiving the debt. What happens? You make a gain. Yes, you make a gain. Why? Because you are supposed to pay someone something, but now you don't have to pay anymore. That person says you don't have to pay me. That means you make a gain out of this, and this gain is an income. It's an income. But the question here is this a taxable income? Is this a taxable income? That is the important question. So let's go to the general principles of taxability. Yeah, what kind of income is taxable? Now, a taxable income is when an income is derived during a year of assessment. It's from Malaysia, it's from a source within Malaysia, and it is by any person, right? By any person, right? Most importantly is that it is not capital in nature, right? When it's not capital in nature, the income will be taxable. Now, this is the general principles of taxability. But if we look at our case, yeah, on waiver of debt from a loan from director, what happens here? Is this a taxable income? Because we have established that this is an income. When you don't have to pay someone money, right? The person waives the debt, you receive a gain, and that's an income. But is that taxable? Let's look at our case. Now, this case that I want to share with you here is this client of ours, right? Our client is a dormant company, right? That means the company is not doing business anymore. There's no activity, no trading, right? It's dormant, not doing anything already, yeah? And the company is in the midst of striking off. That means the company wants to close down, right? The company wants to close down. They want to strike off the company with the SSM, right? With the Companies Commission of Malaysia, and they don't want the company anymore. Now, in year 2019, right? In year 2019, the client noticed that, hey, there is still an amount owing to director in the accounts, right? In the accounts. So when they want to strike off a company, they need to clear off all the liabilities. They need to clear off all the liabilities. And amount owing to director is a liability, right? It's one liability that the company has. So to strike off, the company cannot owe anyone any money, right? So the company then says, okay, I will then talk to the director, right? And then why don't I just write it off? I'll just write it off, the director agrees, the director agrees to have this amount owing to the director being written off so that the company does not have to pay the director anymore, yeah? So this is a waiver of debt. That means the director is waiving the debt from the company, right, to the director. So the director says, okay, I'm waiving this, you don't have to pay me, and then the company can then write off this amount. Okay, now this amount is 50,177 ringgit, yeah? And because this is an amount owing from director, the company says, oh, this is a capital in nature. This is capital in nature, and therefore this amount is not taxed. This amount is not taxed in year 2019. Because remember what I was saying about general principles of taxability? When it is not capital in nature, it becomes taxable. When it's capital in nature, it's not taxable. So the client argues and say, this is capital in nature, therefore it is not taxable. So it's not taxed. Now, problem comes later when the Inland Revenue Board comes and do an audit, all right? Comes and do an audit and check on this account of this dormant company, because the dormant company wants to strike off, wants to close its file with the Inland Revenue Board. So it's usual the Inland Revenue Board will check further and look into this account, right, before it strikes off. And the Inland Revenue Board found that, hey, there is a waiver of that. And this waiver of that is not taxed. It's not taxed, yeah? So IRB then says what? IRB says, no. This debt written off is not capital in nature. It's not capital in nature. It is revenue in nature, right? It's revenue in nature, and it should be subject to tax. That means the 50,000 ringgit, right, that the director waived the company from paying back, the IRB now says it is taxable, right? So this is what happened. You see, when the client submits its income tax return, right, they say this is a non-taxable income. Initially, it says this is a non-taxable income, right? And this 50,000 is not taxed, yeah, it's deducted out, yeah? But when the Inland Revenue Board comes in, they say, hey, this is not a capital in nature. This is not capital income, right? This waiver of that, you can't treat it as non-taxable income. It should be taxed. It should be taxed. So the Inland Revenue Board came in and say, this 50,000, you have to pay tax for it. It's a taxable income. So now what happened? What do we do then? What do we do? Now, this is what we did, right? We analyze further. We have to analyze further. And the most important thing that we need to analyze here is whether this waiver is capital or revenue receipt. That's the most important thing. Because like I said, if it is revenue in nature, yes, it's taxable. But if it's capital in nature, then it is not taxable, right? It's not taxable. Just like what I mentioned in my last episode. Yeah, I mentioned this in my last episode. Capital receipt is not taxable. Revenue receipt is taxable. So waiver of that. Can I say waiver of that capital receipt, or can I say it's revenue receipt? Now it can go either ways. Yeah, it can go either ways. Waiver of that can be capital receipt, can be revenue receipt. So we know that if it is really capital receipt, it shouldn't be taxed because there is no capital gains tax in Malaysia, except for disposal of real properties. Yeah, except for disposal of real properties or shares in a real property company. Otherwise, no capital gains tax in Malaysia. Therefore, if the receipt becomes a capital receipt, it should not be taxed. Yeah, it should not be taxed. This is the grounds. Yeah. So we look at this. Now. Under section 30 bracket 4, right? Subsection 30 bracket 4, right? Sub 30 sub 4, yeah. It says what? Yeah, right? If a deduction has been made under subsection 33(1) in computing the adjusted income, right? That means, yeah, if you have taken a deduction, right, under section 33 sub 1, when you compute your adjusted income of the relevant person for the basis period, right? In respect of any outgoing or expenses, right? That means if you have incurred certain expense and you have taken deduction, right? In respect of this outgoing or expense, and then this amount, right? This whole or part of this amount, yeah, right? That is then released. That means, yeah, if you owe someone money because you have taken deduction, and this amount is then released. Now, this amount being released shall be treated as a gross income for the relevant period for the business. Now, in other words, what is most important here is, have you taken any deduction under section 33 sub 1? Have you taken any deduction under this subsection 33 bracket 1? Now, this is the most important thing. So what does it mean? Now, in other words, when you receive money as a loan, right? When the director loaned the money to the company, have you used this money to pay off certain expense, right? Including any sum payable, rent payable, or even expense incurred, and that you have here because you loan money from the director, right? Have you taken deduction for when you use this money, right? That means when the director lend you money, have you used the money to pay off certain expenditure and you have taken tax deduction under section 33? If you have, yeah, then when this debt is being released, that means when this loan is being waived, this amount released will be treated as gross income and it becomes revenue in nature. So the most important thing here is we need to determine whether the money that you borrow, have you used it to take deduction? Have you spent it on expenses that gives you tax deduction or not? If there is, then the waiver of that will be revenue in nature. It will be taxable. So we do an in-depth analysis. We analyze the loan from this director and look at what are the purposes. Now, what are the purposes of this loan? Where have this loan been used? All right. And we realize that the loan is used for the following purposes. Yeah, it's not used for just one purpose. It's used for a few different purposes. Yeah, first, it's used as a working capital, right? General working capital, and no deduction has been made under subsection 33. Okay, and this loan was also used to pay off operating expenses, certain operating expenses, but these operating expenses have been added back in the tax computation, right, for year 2018 and year 2019. Yeah, it has been added back. And of course, some part of this loan is used to pay off certain expenses, of which, yeah, right, have been allowed for deduction, but not all. Some allow full, some give you full deduction, some gives you half deduction only, some only give you 1/3 deduction, right? And in the tax computation for year 2018. Well, that means this loan taken, this whole loan amount, yeah, it's not entirely used for deduction, for tax deduction, right? It's not entirely used to pay off expenses that you give you full tax deduction. Some is just for working capital. Some is used for expenses, but not deductible at all added back, not deductible. Some used for full deduction, yes, but some half, some just 1/3. Now, so we did an analysis, right? We tell the Inland Revenue Board, we say, hey, IRB, all right, when the loan is being waived, we need to know whether the loan has given you tax deduction or not. If there is tax deduction, then of course, when it's waived, it is taxable, right? Because it becomes revenue in nature. But if it has not taken deduction, when it's waived, there is no taxable income, right? It is capital in nature. So we analyze and we propose to the IRB. We say, hey, since this whole loan amount is not wholly used for expenses that give you tax deduction, why don't only the portion of expenses that were entitled for deduction is taxed? And instead of the whole amount, instead of the entire amount, why don't you take only the portion that already gives you deduction to be taxable? The portion that has never enjoyed deduction, not taxable. Now, this is what we propose to them. And we then have to substantiate with general ledger of the director's account as well, right? We substantiate with director's account ledger, the journal voucher, and also the tax computation to show clearly what has taken deduction, what has not. And this is an analysis that we have done, right? We did an analysis, you know, we say out of all the loan that comes in, yeah, right? We say, oh, part of it is actually just, you know, working capital, not taxable at all, right? Because it's just a loan. Well, of course, some is taxable because it's used for some expenses, right? It's used for deductible expenses, right? Like all these, right? It's used for expenses that is deductible. But some of them, right, is only allowed, you know, 2/3, 1/3 is added back. So only 1/3 should be, 1/3 is added back. So only 2/3 should be taxable, 1/3 shouldn't be taxable. Yeah, only 2/3 is taxable, 1/3 is not taxable. Then some of them is totally added back. You know, some of these expenses that you paid is totally added back, not taxable, not deductible at all, no deduction taken. So all these shouldn't be taxable. So we did an analysis and we found that, hey, the taxable portion should be only this, 23,000. The other portion, 26,000, should not be taxable because it is for capital in nature, right? There's no deduction taken. Now, out of this 50 over 1,000, only 23 is taxable, 26,000 is not taxable. So we propose this to the Inland Revenue Board, and yes, it's agreed. It's agreed, it's accepted by the Inland Revenue Board because it is true that if a receipt is capital receipt, it should not be taxed, yeah, except for real properties, yeah, disposal of real properties or disposal of shares in RPC, yeah. That's the rationale behind. And subsection 30(4) is not fully satisfied, yeah. It's not fully satisfied if the operating expenses are not even allowed for deduction under section 33. So this is very important. When you see a loan comes in, right, how do you use this loan? Do you use this loan for paying off expenses that give you deduction? Or are you using it to paying off something that is capital in nature? Or are you paying off something that doesn't give you deduction at all? When there is no deduction taken under section 33, section 30 sub 4 will not be satisfied, and therefore the release of that will not be taxable. See that? So that is how we do it. And what is our advice to you? What's our advice to you? Our advice here is, in future, please make sure whenever you take up a loan, please have proper documentations to justify the purposes and the usage. The purpose and the usage of the loan is very, very important for you to argue in future when you waived it, right? When you waive the debt, whether this income is taxable or not, yeah? And you have to substantiate it with things like your journal voucher, your payment voucher, or even director's resolution sometimes, yeah, to explain what is the purpose of the loan, yeah. So that is how you tackle this, right? And that is how we handle the case for a client and make the client pay less tax, less penalty. All right. So now, again, let me remind all of you, now this is one of the very classic examples of which when the Inland Revenue Board comes and audit you, right, they will find fault. They will find fault and they will tell you, hey, this one you have done wrongly. You have to pay extra tax on this. You have to pay penalty on this. If you ever receive any tax audit letter, from the Inland Revenue Board telling you that you have done this wrongly, you have done that wrongly, you know, and ask you to pay more tax and penalty, don't be afraid. Let me just remind you, don't be afraid. Don't be panicked, right? Don't be so afraid and say, oh, I have to pay so much tax and be very panicked. Don't. Come to us, right? Just drop us a message. You can go to our Facebook page, right? That is either YYC Advisors or my own Facebook page, that's Tax Guru Zen Chow. Send us a message. Send us a private message with the tax audit letter that you receive. Show us the letter. We will give you a complimentary online consultation to tell you how to solve this and see if we can help you, yeah? Because our aim here, right? Our aim here in YYC is to help you to solve tax audit issue. Yes, that is what we want to do. We want to help you to solve your tax audit issues with our techniques, yeah? So don't be afraid when you receive any tax audit letters or any tax audit findings. just send to us, send us a message. We will help you to solve it. Okay, so that's all from now for today. Now, do you have any questions at all? Any questions from anyone relating to this issue? If you've got any questions, feel free to put into the comment box and I will answer to all your questions one by one. All right, so let me just have a sip of water and feel free to put in all your questions into the comment box right now. Okay. All right. Okay. Is there any questions at all? Is there any questions that you want to put into the comment box? I'm all here to answer to you. And of course, again, let me remind you, if you say, oh, wow, this technique is good, this is something that I've learned, do you have more techniques to show us? Do you have more techniques to tell us? Now, those who have just joined us, who have missed the earlier part, let me tell you, today is case number 8 already, right? It's episode 8 already, but don't worry about missing the previous episodes, yeah? Don't worry about missing the previous 7 episodes, because you can still go to my Facebook page that is here, Tax Guru Zen Chow. Go to my Facebook page, and if you look at the video, right, just go to the video section, you will find all the previous 7 episodes all there for you to view again, right, and to learn again. But just remember, I encourage you to follow. That means go to my page, like it, follow it, share it, right? I encourage you to follow my page, because if you follow my page, from time to time when we have this live session, you can join and you can ask questions on the spot. Yeah. All right. I have one question coming in already. Wow. I have one question over here, and it's from Ryan. Okay. Ryan Law has this question that asks, yeah, if the amount due to director is for payment to trade and other creditors, considered as revenue or capital in nature. Now, Ryan, this is a very good question. This is a good question. Now, you see, when you have this amount due to directors, that means loan from directors, and if you don't use to pay expenses, if you don't use it to pay off expenses, yeah, whereas you use it to pay off your balance sheet item like your trade, other creditors, these are all balance sheet item, right? You are not actually directly getting tax deduction out of it. You see, you are not getting tax deduction by paying these people, right? If you use it to pay your supplier, you use it to buy materials, then yes, you get deduction. But if you use it to pay off your balance sheet item, it is not a direct deduction, and therefore it's still arguable. It's still arguable on whether it's capital or revenue in nature. Of course, I would say if you pay off your other creditors, it's most probably capital in nature, not taxable. If you paid off your trade creditors, right, then we can still argue and say this is not really paying off by buying something directly, right? It's to pay off your creditor. So we can still argue that. But let me tell you, if you pay off your other creditors, it's definitely a capital in nature. Trade creditors, we can still argue, but it really depends on how we look into the case. Yeah. So of course, Ryan, if you have got this kind of case, feel free to come to us. We will see how we can help you on that. Yeah. All right. Next one is Ivan. Okay, Ivan Chow has this question here. What if it's a dormant company on which all being the remaining balance has become amount due to director for many years? How do we trace between advance from director for expenses deductible or non-deductible? We would like to strike off or wind up the company. Please advise. Wow, Ivan, we need to analyze. Now, I know you say it has been there for many years, right? It has been dormant for many years, and the remaining balance has been there for many years, right? But still, we need to trace back and look back into the general ledger, look into, why would there be an amount due, right, to directors, right? Why would there be an amount? Now, I'll give you an example. Let's say, if you say, oh, the director buys materials, right? Last time they purchased some materials for the company, right? Buy some trading stocks for the company, pay on behalf of the company, and therefore there becomes an amount due to directors. Now, this is very obvious that this amount is used to buy materials of which it was already deductible. It was a deductible expense. So this one, we cannot say the waiver becomes capital in nature. The waiver will become revenue in nature. But if you say, oh, clearly the money was lent by the director last time, right? When we look back into the records, it was borrowed by the company, yeah, from the director. Then this money was not used directly to buy materials or whatsoever, right? It's used for some other purpose, capital in nature purpose, yeah. Then that waiver will be capital in nature. So, Ivan, if you say you're going to strike off a company and you want to look at the tax implication, I would advise if you can drop us a message, make an appointment with us, and we see how we can help you to maximize, your tax savings over here. All right, Ivan, I hope you will send us a message. Then we will see how we can help you. Drop us a private message. Okay. Ryan Law is saying the taxable amount. Okay, the taxable amount, could it be set off with tax loss brought forward? Oh, well, yes. Well, it becomes taxable. If it's become taxable amount, it definitely can be set off against your tax loss. Yeah, if you have got any tax loss, yes, taxable income can be deductible against your tax loss. Yeah, Ryan. Okay, next question. I have GKL Fong. Okay, GKL Fong is asking, if director is selling the share, is the director need to pay tax? How to calculate the tax amount? Now, GKL Fong, if you sell shares, I mean, director sell shares, you mean you're a shareholder, right? In other words, you are the shareholder. You sell off the shares. Do you have to pay tax? Now, generally, if you sell off your shares, you don't pay tax. Why? Because it's capital in nature. I told you there's no capital gains tax in Malaysia, yeah? Generally, you don't pay tax. But you got to be careful with one thing, that is whether your company is a real property company or not. Because if you sell off shares of a real property company, then it will be taxable. It will be taxable under RPGT, real property gains tax. Yeah. But normally, if you sell shares of a company and the company is not a real property company, you don't have to pay tax for that. All right, GKL Fong. All right. All right. Next question I have here from Agnes Lee. Agnes Lee says, if you use a director loan to purchase machine, is this taxable if waive the debt? Very good question, Agnes. Now, just now what did I say? If you have got this money, right, and you use it to spend on something of which you get tax deduction, this waiver will be taxable, right? Will be taxable. So now, if you say you use this money, you use it to buy machine, and if you claim capital allowance for the machine, now if you have claimed capital allowance for the machine, then you have got some deduction already, right? You've got some deduction, and therefore, when you waive the loan, it will be taxable. It will be taxable. But if you say, I buy a machine, but the machine was not claimed capital allowance, no capital allowance claim, then it's a different story. Then this waiver is not taxable because you have not got any deduction at all. See that? So, Agnes, this is how you view that. Yeah? All right. Okay, another question from Agnes is, waiver of debt, is this taxable under director personal tax full amount? Agnes, you see, in our case here, it is an income to the company. It's an income to the company. Why? Because I am owing the director money. I'm the company. I'm owing the director money. And now the director tells me, hey, I don't have to pay. So who earns from this? Who gains from this? I, right? I'm the company. I make a gain. So this is my income. It should be taxable on my side. So it's not taxable under the director's own personal tax. Yeah, the director has no income made. Yeah, it is the company that makes such income because the director does says I don't have to pay him anymore. See that? All right, Agnes. All right. I have another question from Jack Lee. Okay, other creditor, Jack Lee says, such as a logistic company, is in revenue in nature. Now, Jack Lee, I need to look into the case further. Now, if you just tell me you are a logistic company, you have other creditor, whether it's revenue in nature or not, I cannot just tell you right now because I do not know what kind of other creditor is this. But let me go back to the basic, yeah? Even though you're a logistic company, if you say you have gotten some deduction, right? You have gotten some deduction from certain expenses, and therefore you have this other creditor. And this waiver is then taxable. I'll give you one example. Sometimes you may say, oh, let's say rental. Let's say rental, for example, yeah? All right. Now, you have got a landlord, and this landlord is not your trade creditor, right? And when you owe your landlord money, it becomes other creditor. It becomes other creditor, right? Now, this other creditor, if you say, oh, I use money, to pay off, the rental, then of course this you have got deduction before. You have got deduction, right? But if you say this is other creditor because you borrow money from someone, right? And then you have an other creditor, you take the loan from director to pay off that creditor, also other creditor, right? This is not deductible. There's no deduction. Therefore, the waiver becomes not taxable. All right. So, Jack Lee, that's how it works, yeah? Okay, Jing Ying says, if the director borrow the loan with the bank and the guarantor are company or so director borrow loan, but guarantor becomes the company, will this be deductible for tax? Okay, Jing Ying, you are talking about the tax deductibility for your interest already, is it? Right? You're not talking about the waiver already, right? You're talking about the interest in expense, is it? Now, put it this way. if the company is guarantor, the interest expense should not go into the company, right? The company is only acting as a guarantor. Right? There will be no interest expense to the company. The interest expense is to the director himself. It's a personal loan. Right? So if you say this is a personal loan, how can it be taxable, deductible? How can it be deductible in the books of the company? Right? It's not even the company's loan. It's the director's own loan, you see? So it is not tax deductible. It is not tax deductible. All right, Jingye? All right, next question is from Richard. Richard says, if loan from director was later converted to share capital and the money loan from director was used to disburse expenses, any tax implications? Very good question, Richard. Very good question. I like this one. Now, one way to also tackle this, or one way to tackle this is that instead of leaving it as a loan from director, why don't I convert it into shares? That means that I make this amount that I owe to the director, right? I say, why don't I issue you more shares, right? I make you a shareholder, or I increase your shares if you are already a shareholder. If you're already a shareholder, I increase your shares, or I make you become a shareholder. And this loan from director will change into share capital, right? It's no longer sitting at the liability. It's now sitting at the owner's equity. Is at the equity already, right? It becomes capital. Now, when it becomes share capital, this money used is, of course, there's no waiver anymore. There won't be any waiver. If you use it to disperse, for any tax deductible expenses, there will be no more tax implications, right? Because converting a loan into a share capital has no tax implication. So that is a very good move, Richard, if you doing that. All right. HL Khan is asking, a trade creditor overdue for about 5 years. Wow, 5 years, trade creditor, yeah, and converted by the authority as waiver of debts during tax audit. From what point can we argue on it? Any time frame to be set that company needs to waive the debts? Okay, HL Khan, okay, put it this way. When you say a creditor is overdue for 5 years, well, it's logical why the authority changed it to waiver of debt, because when you owe someone for 5 years and you don't have to pay and there's no movement at all, rightfully the authority will say, hey, that means you don't have to pay anymore. Right? You already owe for 5 years and you don't have to do anything, right? So it is logical to say you don't have to pay. So it becomes a waiver. Now, when it becomes a waiver of that, then it could be taxable. It could be taxable. So it all goes back to how did this trade creditor comes about? Yeah, it should probably be because due to you purchase something from this trade creditor, from the supplier, right? And therefore it is called trade creditor. Now, if it's a trade creditor, it shows you should have taken deduction. You should have taken deduction last time when you purchased something from this supplier, and now this waiver will be taxed. Yeah, unless you can show that this creditor is still keeping touch with me. This creditor is still chasing me money. It's not that I'm not paying. It's not that I don't have to pay. The creditor allows me to delay for 5 years. I can show proof that the creditor is still keeping in touch with me, still asking me to pay. It's just that I have not paid. It doesn't mean I don't have to pay. Then you can tell the authority, no need to change it to waiver of that. No need to change because I still have the obligation to pay. Yeah. So HR Tan, see if you can do that or not. Yeah. All right, Jess Lee is saying that if director pass away, the write-off amount will be subject to tax. Now, Jess Lee, if the director pass away, well, then you waive off. Then you say, oh, because the director passed away, I didn't have to pay the director anymore. Then it goes back to my case today. You have to see whether this amount owing to the director, whether it was used to get certain tax deduction or not. If it has been used for getting tax deduction, that is taxable. But it has not been used for getting tax deduction, not taxable. All right, it's the same thing, yeah, Jess. Okay, next case, the next question here I have from Jeannie. Jeannie Wong is saying, director loan company for assets, properties. Is this waiver taxable? Now, very good question, Jeannie. If you take the loan from director to buy assets like properties, now, I think most probably you won't be getting any tax deduction when you buy properties. So the waiver is not taxable because you use it for capital expenditure. You have not gotten any tax deduction. When it's waived, it should not be taxable. Yeah, but let me remind you, it must be used for something that you have not gotten tax deduction when you use the loan. All right, Fong Lan has another question. Amount due to director because of buying company property. Now we refinance this property. The amount to pay back director is term loan interest that's deductible. Fong Lan, you're again asking about tax deduction now. Okay, never mind. Now you say you refinance the property, right? Now you have this interest, this loan interest. Okay. Now Fong Lan, very important question. Like I mentioned last time when I talked about interest restriction, there is an episode that I talk about interest restriction. You have to see what is the purpose of the loan. If you say the purpose of the loan is for business purpose, then you have to prove it is for business. Otherwise, there will be interest restriction. There will be a formula to calculate how much is deductible. If you say the purpose of the loan is to use to buy some other things that is not revenue in nature, not business purpose, maybe you use it to lend to someone again, let's say, then it's not deductible. So whether your interest is deductible or not depends on what's the purpose of your loan. Okay, if you want to know more, go to my previous episode. There is one episode where I talked about interest restriction. I explained quite a lot over there. Yeah, Fong Lan? All right. Ryan Law says, all right, could we solve the issue by increased share capital, then pay back director? Of course, we will have additional costs for stamp duty or other increased share expenses. Well, Ryan, like I mentioned already earlier, right? I said if you change this, if you change the loan to director into share capital, it actually solved the problem already. Because when you solve this, when you change to share capital, it's no longer a loan from director. It's no longer a loan from director. It becomes share capital. Now, if you say you then want to pay back, you want to pay back director, you can always pay back the director, right? You want to buy back their shares, you can always do that, yeah? So, yes, you're right. If you change it to capital, then somehow you actually solve the issue, all right? Helen He has this question. Zen, if company really no money to pay back director, but the company intend to strike off any better tax planning to avoid tax. Now, Helen He, all right, I can't exactly tell you how to do this because there are different ways. There are different ways to do this, Helen. That's why I was saying, Helen He, if you want us to help you to see how to plan this, what you can do is I encourage you to drop us a message. Drop us a private message and see if we can do something for you. Drop us a private message and make an appointment with us and see if we can do some tax planning for you to help you to get the maximum tax advantage over here, right, Helen Yee? Okay. All right. Next question here is from Li Yan. Li Yan is asking, hi, if company loan from director to buy the machine 1 million, after that company use the machine, take loan from the bank, is the loan interest deductible? Wow, everyone is asking about tax deductibility. I'm talking about waiver of that today, but now Li Yan, you're asking about you use the machine to take a loan, is the loan interest deductible? Again, it goes back to what's the purpose of the loan. I know you use the machine to mortgage, right? To mortgage and you take a loan, but what's the purpose of the loan? If the purpose of the loan is for business purpose, then yes, it's deductible, but it could be subject to interest restriction. If the purpose of the loan is for some other things, if it's for capital in nature, then it is not deductible. So again, Lian, go to my previous videos on interest restriction. You will find more details over there. I talked about how would an interest be deductible. All right. Okay. It all depends on the purpose of the loan. Yeah. All right. Next is from Bithia. Bisha, do I call you Bithia or Bisha? Okay. Hi, the company has been in operation for years, but never make any profit and therefore accumulated tax losses. And now the company decided to strike off an all amount owing to director to waive off all debts loan to pay off operating expenses. Can we offset with unutilized tax losses? Very good question, Bithia. Someone asked me that again just now, right? Asking about if I have a taxable income right now because of this waiver, can I set off against my tax losses? Yes, you can. As long as all these tax losses are losses that you have carried forward, right, that you have brought forward, if this is an income that is taxable when you waive the debt, yes, it's deductible or set off against your unutilized tax losses. Yes, you can do so. All right. Okay, GKL Fong has one more question. Oh, yes, Richard, thank you. Yeah, you're welcome, Richard. GKL Fong says, what if director borrow the loan using their own name from bank, but property under company name? Can the interest expense and tax paid by the company? Now, GKL, it really depends on why. Now, if you say the director borrows money, right, and you say they use the company's properties to charge to the bank, for this loan. Again, is this really a company's loan or individual or the individual's loan? If it is the individual's loan, the director's personal loan, even though it's paid by the company, it's not deductible one because this is not even a company's expense. Yeah, it's not a company's loan. But if you say, oh, the director has to use its own name to take up the loan, but it's actually for the company, it's the company's loan. Now, then you probably need to have more documentation. You need to probably have more documentation like director's resolution and things like that to say the loan that is taken by the director is then given to the company for the company to use, and this becomes the company's loan, and company will take up the loan into its balance sheet. Then it makes sense. Yeah. So GKL Fong, I would say if you want to plan these kind of things, I would encourage you, drop us a message, do an appointment with us. We will tell you what kind of documentation is required, right? That will make it that will make it safer for you to argue that this is a loan for the company. Then only it becomes tax deductible from the company's perspective. Yeah, we need to look into this planning. Yeah, GKL. All right. Next is Agnes. Agnes has got a question. If the company write off the amount due from director when struck off, right? Any tax implication? Is this amount due from director written off taxable under director personal tax? So wait, hold on, Agnes. You're saying that company write off the amount due from director. That means the director is owing the company's money. And now the company says, you don't have to pay me. So the director is the one that gets benefit, right? The director is the one that gets benefit, right? So is this taxable? Right, Agnes, go back to simple rules. When the director takes up loan from the company, when the director borrows money from the company, has the director used it for, business deduction? Definitely not, right? The director will probably use it for personal usage, right? When it's used for personal usage, there is no tax deduction taken. So when the company tells the director, okay, you don't have to pay me, right? And well, the director makes a gain, but this gain that he made was actually, used, the money that he got last time was not even taking any tax deduction last time. So this waiver will not be taxable already for the director, right? Unless you say the director takes the money and use it for his own sole proprietorship and then pay off expenses for his own sole proprietorship, then different story. But if this loan is used for personal use, then it is definitely not taxable because no deduction was taken. Yeah, all right, Agnes. Okay, all right. Now Lian was saying that loan from bank will use to pay back the director. Now, Liam, if you say this amount of loan is to use to pay back director, then it's capital in nature. Now, it's capital in nature, Liam, because when you take money, when you loan money from the bank, you have to use it for business purpose. Then only it is tax deductible. When you use it to pay off your director, it's not really used for business, it's not really used for business, because it is used for you to pay off loan, right? So it could be non-deductible, right, Lian? So if you say you want to plan something on that, I would advise you to really come to us and then we see how we can help you on that. All right, okay. I have another question here. It's from Eric Ng. Okay, that's from another chat group. All right, Eric Ng says, but fixed assets have CA. Yes, Eric Ng, fixed assets have CA. That's what I was saying. If you use a loan from director and you use it, right, to buy machines and you claim capital allowance, the waiver is still taxable. The waiver is still taxable because you have claimed capital allowance already. All right. Okay. I have another question here from Helen He. Helen He says, Zen, if the waive of debts already taxable in company tax notation, will the government request the company to remit the money as unclaimed money into MOF? Well, if you have already waived it, you don't have to, right? If you have already waived the debt, right, you don't have to pay already, then of course you don't have to. But right, you have to be very careful with this. You have to be very careful. From the income tax point of view, right, the Inland Revenue will not ask you to do so. But if the what you call it, Jabatan Accountant Negara, right? Jabatan Accountant Negara, where if they come in and they found out, hey, this becomes unclaimed money, right? Unclaimed money means you have to pay back to the government. Now, if you are asked to pay back to the government, that means it's not waiver of that. And that means it's another story, It's not a waiver of that anymore. You have to pay. It's just that you don't pay your creditor. You pay the government. So if you are really asked to pay, that means you are not enjoying any waiver of that anymore. You're not enjoying waiver of that, and you are not supposed to be taxed for the waiver anymore. All right. So it depends on whether you are being asked to really pay back or not. Yeah, Helen. Okay, next question from Jocelyn. I have here, our company have a property and would like to transfer it to personal name. Any charges involved for the kind transfer? Jocelyn, this question is very much out of today's topic. But you know what, Jocelyn? I encourage you, drop us a message. Drop us a message, tell us more details, right? We will be able to get back to you on this, Jocelyn, right? Drop us a PM, drop us a private message. We will get back to you on this question, yeah, because I will see how we can help you on this also, all right? Okay, Doris has a question. If the partnership wants to close the business, but there are still trade debtors in the account, which was outstanding for a long time, and the debtors are no longer in business, what action should we take before we close the partnership? Now, Doris, if you say you have a lot of trade debtors, debtors means people owing you money, yeah, and you say you want to just close off, right? Well, if you say you really cannot collect money from your debtors anymore, you probably just want to write off law. You just do a write-off, but I would advise you to do more actions first. That means send your debtors all the letter of demand, you know, or send reminder letters, letter of demand, and if can send legal letter. And if you still cannot, you know, get all these debts, write them off as bad debt, because if you have done all these actions, your bad debt will be tax deductible. Your bad debt will be tax deductible already, yeah, before you close. Okay, Simon Wong has this question over here. On the other hand, if a company wishes to apply for strike-off, it has written off an amount owing by an untraceable other debtor. Okay, again, other debtors are over here. Is the amount written off considered as income to that person? Okay, so you are saying that a company wishes to apply for strike-off, it has written off an amount owing by an untraceable other debtor. That means a debtor is owing you money, right? And is this amount written off considered income of that person? Now, Simon, yes, actually, if you write off, if you say I waived your debt, yeah, it is the income of the other person, right? It is the income of the other person. But the whole problem here is whether the Inland Revenue Board will go to that other person or not, will go to that other person and tax that person or not. That's another story, right? That's another story, yeah. So you know what, Simon, I always advise one thing. Don't simply waive off the debt of your debtors, because if you simply waive off the debt of your debtors, you don't get tax deduction, right? Because you are waiving off your debt. But if you do things like you send reminder letter, you send letter of demand, you send legal letter, and then you write off as bad debt, that becomes tax deductible. All right, Simon, hope you get it, huh? Okay, Lai Siu Chin is asking this question. Lai Siu Chen, sorry. If company apply SME loan to pay back director loan, so interest can be deductible. Now, Lai Siu Chen, again, you're asking about tax deduction again, yeah? Now, if you borrow money, right, and you say this is not directly used for business purpose, then you use it to pay back certain loan, it's non-business, it's not directly used for business, it's only for working capital. Then we have to use the interest restriction. We have to use the interest restriction formula to see how much is deductible for you, right? So again, I encourage you, those who ask interest expense whether deductible or not, go to my previous episode about interest restriction, look at that, then you will know, you'll find out more whether interest is deductible or not deductible, all right? Like Siu-Chen, go to my previous video, just go to my Tax Guru Zen Chow Facebook page, go to the video section, you will find the interest restriction video, which I have done previously. That will tell you more, right? Because you will have to use interest restriction to calculate whether it is deductible or not deductible. Okay, all right. I have a question here from Eve. Okay, Eve Tan is asking, wait, hold on, let me just display the question. Hold on, where's my mouse? Okay, Eve is asking this question. Director account or loan, both is balance sheet item, should be capital in nature, right? Why waiver should tax? Any case law can support? Wow, Eve, you ask very technical question, yeah? Eve, okay, now, there is a case law, right? I cannot remember by heart right now. There is a case law to support this, yeah? That says, right, when there's a waiver of that, if this amount of loan that you have taken last time is used to get deduction because you use it to spend on expenses of which you have gotten tax deduction, now the waiver will become taxable, right? Even though it's balance sheet item, even though you say director account is balance sheet item, loan is balance sheet item, right? But Section 30 bracket 4 says very clearly, if you have gotten tax deduction, it will be taxable. That's a case law on this, but I cannot remember by heart, honestly. If you really want to know what kind of case law it is, you know what? Drop us a private message. Drop us a private message, PM us. We will give you that case, right? We will tell you what case is that, and then you can read that case out. All right? Okay, let's go to Eve has another question here. Unable to track back the detail in a director account, cannot determine whether waiver is taxable. What can we do? Now, Eve, to be very honest, if you really cannot trace back, like what we did for our client, we did an analysis. We traced back what is the usage of the loan. If you can't trace back, then you can't prove that it is not used for capital expenditure. It will be taxable. It will still be taxable. Yeah, and IRB will say you have to prove me wrong. You have to prove me wrong that it is not used for tax deductible expense. Right? If you can't, then it will be taxable. All right. Okay, Richard has one question. Okay, I'll just do that as the last question already. Yeah, Richard. All right. If the company is instructing of waive the loan director, right? Waive the loan to director, will this be deductible? Now, again, just like I said, yeah, if you waive the loan to director, now director is now your debtor. If you waived it, it's not tax deductible. It's not tax deductible. When you waive a debt, or when someone owes you money, you waived it, loan to director, it's not tax deductible. It can only be deductible when it becomes a bad debt. And when I say bad debt, you have to do all steps, like you send reminder letter, send letter of demand, send legal letter, like if it's loan from director, loan to director, right, that is amount from owing from the director, right? You have to really send legal letters, sue the director to court, and the director cannot pay you. Then only becomes a deductible bad debt. Otherwise, the most of the time when you waive off the amount, owing from a director, it's not deductible one. Okay. All right. Okay. I'll just answer for the last question, and the very, very last question. It's 12 o'clock already. All right. That's from Shirley. Shirley says, if a company has loan from directors, internal company money, a company only pay loan interest without payback principal loan amount. Is it unclaimable money at any period limit? Okay, Shirley, your question is pretty technical already. Shirley, you know what? All right. Now, if it's regarding to all this unclaimable money act, why don't you send us a message, drop us a message, PM us into our private message, and we will get back to you on this. All right, we'll get back to you on this so technical questions. Right. All right. So, all right, it's 12 o'clock already. As usual, we want to keep it at 1 hour. Right, we're gonna keep it at 1 hour. It's 12:01 already. And as usual, thank you so much. Thank you so much for your time, right? For joining me for 1 hour to learn how to solve tax audit issue. So again, let me remind you, if you receive any letter at all, if you receive any tax audit letter, don't be afraid. Don't be afraid. Just send us a message, show us your letter, and we will get back to you. We will help you to do a complimentary online consultation, because to us, we want to help you to solve tax audit issue. Yeah, that is our aim over here. We want to solve your tax audit issue. So don't be afraid when you receive tax audit letter. And remember to go to my Facebook page, like, share, and most importantly, follow my Facebook page, because from time to time, I will be sharing more secrets. I'll be revealing more techniques to all of you. And if you don't want to miss all of them, you must follow my Facebook page, okay? All right, so till then, I'll see you again, all right? Thank you so much. Thank you so much, all right? I'll just hide this back. Yeah, okay. Thank you so much for this, and I shall see you again next time, all right? So till then, have a great day, have a great Friday, and have a great weekend, all right? I'll see you next time. Bye-bye. Bye-bye. Take care.
你相信你可以勇敢地往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕。我们一起到达，是 number one， 强大的企业家，超越表现的力量。我们一起到达，是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前